Economy and Market on BDTV, where you have a breakdown and a rundown of what's happening in the economy as well as on the market scene. We're starting off with some business news making the headlines today. First of all, FCMB is set to raise capital in a new subscription offer after raising over 141 billion naira last year in a public offering. FCMB has announced plans to undertake another offer for subscription as part of efforts to strengthen its capital base ahead of its regional and international expansion. The move is following approval granted by its shareholders at an extraordinary general meeting that held in December 2024. In a notice to NGX Regulation Limited, the board of directors of the group said that the proceeds from the offer will be injected as equity into FCMB Bank Limited, its flagship banking subsidiary. It noted that the offer will be priced against the live market rates while ensuring that investors benefit from an appropriate discount. We are yet to know whether this will be a rights issue or it will be a public offer. The company has said that the full details will be made public after securing regulatory approval from the Securities and Exchange Commission. The capital raise is underscoring FCMB's strategy to position itself for growth, as well as also hitting the 500 billion mark that the bank requires in order to keep its international banking license in Nigeria. Then we're moving on to online publishing. Publishers are sounding an alarm over Google's zero-click AI traffic threats. Publishers are warning of steep decline in web traffic following Google's rollout of new AI-powered search tools. This feature, which is the zero-click AI, is positioned to deliver detailed answers and AI-generated overviews directly at the top of search results, reducing the need for users to click through to source materials. Industry executives have dubbed this trend Google Zero, with immediate media chief Sean Conwell cautioning that publishers face pretty stark traffic losses in the coming years. A report by Enders Analysis and the Professional Publishers Association found that half of UK publishers saw a drop in search referrals over the past year, with some lifestyle sites reporting traffic decline of up to 25% despite ranking first in search. Google is, however, disputing this claim of widespread losses, saying that overall traffic to websites remains relatively stable and that clicks from AI search results are of higher quality. However, publishers argue that fewer clicks means fewer ad revenues and subscriptions. Then we move on to the music scene, where Spotify is signaling that they would increase their price amid their push for 1 billion users. Spotify has indicated that customers should expect further subscription price increases as the company is investing in new features and is targeting 1 billion users worldwide. Alex Nostrom, Spotify's co-president and chief business officer, told the Financial Times that price adjustments were now part of our toolbox after years of keeping fees flat. He stressed, however, that higher prices will come alongside new services designed to add value for listeners. The music streaming giant first raised prices in 2022 after a long period of rapid subscriber growth. This move, coupled with cost cutting, helped the music streaming platform deliver its first annual profit in 2024. Earlier this month, Spotify announced another round of hikes in select markets starting September, sending its shares up nearly 10%. According to Nostrom, Spotify continues to gain market share despite the price increases, with about 3% of the global population currently paying subscribers. Move on to South Africa, where the South Africa's revenue service is considering expanding the wealth tax net to boost revenue. South Africa is weighing a plan to lower the threshold for its high wealth individual tax unit, potentially bringing thousands more rich taxpayers under closer scrutiny. Currently, the South African Revenue Service, SARS, monitors individuals with gross assets of at least 75 million rand, which is about $4.3 million. The unit oversaw about 4,084 taxpayers as at March 2024, more than double its base 3 years earlier. However, that figure lags behind private estimates that suggest that South Africa has over 37,000 dollar millionaires and more than 5,000 individuals worth at least $10 million. Natasha Singh, who is the head of the unit, said expanding the base either by adding more wealthy taxpayers at the current threshold or by lowering the criteria could strengthen collections without politically sensitive tax hikes. A review is underway and any changes could take effect soon as the government searches for revenue sources amid fiscal strains. When we are back from the break, we return with a breakdown from the market from last week. Stay with us. After 4 days of consecutive losses, the NGX went up back again. We saw just the bullish run on Friday as the market closed at an all-share index of 141,004 points, up by around 671 points or about 0.48% on Friday. Year to date, the market remains firmly bullish, up by 37%. Our market cap 89 trillion naira. Total traded volume on Friday was over 1.3 billion shares in deals worth around 47.8 billion naira. When you look at the figures from last week Friday, we see that on the gainers chart it was a limit up day. Basically, 4 of the top 5 gainers all gained 10%. That's the maximum limit of appreciation that a stock can have on a single day. So we saw it with FTN Cocoa that went up 10% to close at a new share price of 6.60 kobo. Bitter Glass continues its rally for 2025, up 10%. Veritas Capital also up 10% to close at the share price of 1.98 kobo. UPDC PLC up 10% to close at the share price of 6.93 kobo, and Sovereign Insurance up by 9.96% to close at the share price of 2.65 kobo. On the flip side, we saw Thomas Wyatt, the book publishing company or the paper company now, down 9.91% to close at the share price of 3 naira. Gerigu Power dropped more than 9% to hit a share price of 1,141 naira 50 kobo. This has been its lowest share price for more than a year. In fact, since after its listing on the NGX, this has been one of its lowest share prices after the first month of rally. Nick Nichols down by 7.51% to close at the share price of 3 naira 20 kobo. Then the Initiate PLC, weeks upon weeks, being one of the best rallying stocks on the exchange, also down 4.43% to close at the share price of 12 naira 30 kobo. Then eTransact down 3.98% to close at the share price of 10 naira and 85 kobo. Then we are cutting to the most actively traded stocks of the day. On Friday, we saw Zenith Bank leading the volumes and value chart with 345 million Zenith Bank shares in deals worth around 21 billion naira traded. They were followed closely by FCMB with 335.96 million shares traded in deals worth around 3.532 billion naira. Then we see ICO Insurance. ICO Insurance has been a very actively traded stock over the past few weeks, 43.7 million shares in deals worth around 181.8 million shares. Then Nigerian Breweries, also significant trading volume, 43.2 million Nigerian Brewery shares in deals worth over 3 billion naira. Then WAPIC or Coronation Insurance, 33.3 million shares in deals worth around 103.562 million shares. Now let's look at the weekly picture. Although Friday was bullish for the exchange, overall from Monday to Friday last week, we saw the all-share index fall by 2.5% as it broke a run of gains that the market had been on since July. Last week, the market was also on a bearish run. This week, the bearish run continued, 2.51% decline. Austin Lars, NCR, and Enamel Wear, Nigerian Enamel Wear Company, were some of the top gainers on the exchange throughout the entire week. So when you look at the chart of the top gainers of that week, we see that Austin Lars gained 20.83%. Then we also see NCR Nigeria, the ATM company, also gained 20.69%. Then Nigerian Enamel Wear Company gained 19.45% during the week. Insurance companies, Guinea Insurance gained 18.79% during the week, and Mutual Benefit Assurance gained 14.29% during that week. On the losers end, we see Thomas Wyatt the top loser of last week, also was the top loser of Friday, was the top loser of the week. It lost almost 19%, almost a fifth of its value, to hit a share price of 3 naira. NEM Insurance, after the weeks of rallying after the naira was signed into law, NEM Insurance had been on a significant rally. However, last week there was significant profits taken, and that stock lost 18.15% to close at the share price of 26 naira to 60 kobo. Stanbic IBTC Holdings down by 15% to close at the share price of 94 naira. Initially the most expensive banking stock, now it's lagging behind GTCO. Lasaco Assurance, another insurance stock that had rallied significantly from the start of August up until last week. It lost almost 15%, down 14.57% to hit a share price of 3.46 kobo. And also RT Briscoe has been another significant rallying stock for most of 2025. However, during the week it lost 13.92% to hit a share price of 3.40 kobo. On a sectoral basis, we see that all of the sectors that we track in the NGX, except the consumer goods sector, all were down significantly. The NGX banking index down just slightly by 0.23%, about 23 basis points. However, the insurance index went down significantly, 4% lost during the week. On the flip side, the consumer goods index was up by 0.83%, and the oil and gas index down by 0.84%. However, the most decline was seen in the industrial goods index that went down by 8.42%. Then we move on to the global markets, starting off with the US indexes. On Friday, it was a very greenish day, very bullish day for investors in the American stock exchanges. Why? The day after the Fed chairman Jeremy Powell made a statement signaling that a rate cut may happen very soon. He signaled that a rate cut may happen as soon as September. Investors took that sentiment, and we saw the Dow Jones index, the S&P, almost hitting 6,500 mark, and the Nasdaq Composite all hitting record points, all gaining almost 2%. They all rallied by almost 200 basis points. In Asia, the sentiment was also similar, as the Nikkei 225 went up. The Kospi index also went up by 0.86%, and the Hang Seng index went up by 0.93%. The same sentiment was shared. It shows that in America, when good things happen in America, it somehow has a ripple effect across the world. The major indices in Europe, starting from the FTSE 100, rallied by 13 basis points, 0.13%. On Friday, the CAC 40 up 0.40%, and the DAX index also closed with a 0.29% gain. We see that the CAC 40, which is the Parisian exchange, is close to hitting the 8,000 mark for the first time in history. Then in terms of currency, the USD against the Naira was trading around the same rate. However, the Naira closed just slightly. There was just a slight decline, as we saw the Naira close at 1,536 Naira to the dollar. Against the euro, 1,799 Naira to the dollar, and against the pound, 2,077 Naira to the British pounds. When we are back from the break, we return with a conversation on Dangote Refinery. Stay with us. So basically, it's no news that Dangote Refinery is set to commence plans to distribute fuel to petroleum marketers. It's been in the works since July. And in August, we saw those 4,000 CNG trucks arrive the shores of Nigeria. Then August 15, which is about 2 weeks ago, we received an update that the trucks were being counted. They will be receiving updates such as the Dangote Refinery is set to distribute fuel to marketers like Nogaza. Ipman is also another marketing association that is also in the works. Basically, all of this is happening very soon. Let's say we don't know how soon those trucks are going to begin. We don't know how soon we're going to start to see those trucks on our streets. But let's say within a week, 2 weeks. And according to Abubakar Maigandi, who is the national president of the Independent Petroleum Market Association of Nigeria, the refinery has commenced numbering the trucks. It initially missed an August 15 rollout date, but that investment if they're already numbering the trucks, it means that they are soon to start to commence the entire operation. Basically, all of that will eliminate middlemen. Is expected, as we have already started to see that even before the trucks were rolled out, we started to see a drop in fuel prices. At least across Lagos, we've seen petrol stations selling fuel at 855 naira, some 865. Around the southwest is around 875 naira per liter. So you already see that there's a possibility that we may see reduced fuel pump prices. And there's also another side of easing the transportation cost of transporting petrol, because logistics is one hellish segment of running a business in Nigeria. Essentially, we say we're on the brink of a revolution in the energy space. That fleet is expected to cut out a lot of businesses, as Dangote Refinery will now take petrol directly from the refinery to the marketers. It is slicing through the entire logistics nightmare. For petroleum distributors and importers, this is a seismic shock. Their hegemony is under fire. So we're talking about the depot owners, the independent truckers, tanker operators. Some of them are now beginning to look at, they are staring down a barrel that they don't want to stare down. Petro1, which is the Petroleum Retail Outlet Owners Association of Nigeria, they are seeing danger. According to them, they said that move could lead to market dominance, job losses. They even claim that some filling stations will have to shut down. But for the everyday Nigerian who runs a roadside business, who is just a regular commuter, if anything that could mean cheap fuel and smoother availability of fuel is welcome, is always welcome every time. So we are witnessing a tectonic shift in the downstream sector that could probably deliver cheaper fuel. But the road ahead means that we need to now demand vigilance to ensure that we avoid a monopoly. We've had this monopoly with NNPC. We are wishing that monopoly shifts to Dangote. Anything when it comes to monopoly with energy may mean it's quite a road that we don't want. It's a road that we don't want to tow. And on the show this morning, we have Abubakar Ibrahim, who is our energy analyst here at BusinessDay on the show. Good morning, Ibrahim.
Thank you for having me, David.
Yeah, so we're going to start very quickly. How will this model affect traditional depot owners and independent truckers and basically petroleum marketers? How will it affect them?
Well, for one, I think we're already seeing it. If you look at some report this morning, Nogasa, that's Natural Oil and Gas Suppliers Association, already clamoring for Dangote to come back to the table and have a conversation with them, because they felt, or they still feel, like this move will, take away their livelihood. And for a fact, I could say that a friend of mine whose dad is under the association Nogasa is currently literally out of job. So it's already affecting some of them, if not all of them.
Wow.
And I think the saying of if you can't beat them, you join them is something that some of these marketers will eventually have to,
So that means they'll probably have to look into now having to start receiving petrol directly from Dangote.
From Dangote, because you can't have a $20 billion investment and have some sort of issues with distribution. So you get it. I think the man himself is trying to everything possible for his business
to become profitable.
And then if you look at the refinery business, according to analysts and players in that sector, that the profit margin is not as huge as you think. Yeah. So him going into that that value chain of distribution is just a way of working
to improve the margin,
gross revenue, and also take out all of the middlemen that has been affecting the business since its operation.
Okay, that's a lot. The fact that people are already starting to lose jobs from that's a route, and we have not even started to
We've
see
not even
those
started
trucks on our roads
exactly
yet.
because again today there are reports that 1,000 trucks are available,
Okay,
and very soon you see them on the streets, on the road, on the Nigerian. But in Lagos, Ogun State, and the Southwest region, until
that's
that's where
1,000
the
trucks.
1,000 trucks, yes. Then until probably when the 4,000 trucks are completed, because they're bringing them in batches, and that's when you can also say it's going across the country. But for now, we're just looking at Lagos, according to those reports, Lagos, Ogun State, and the Southwest corridor.
So now the thing here with this move is that it's tipping the balance towards. I don't even know. I'm not very sure of the data. Do we have up to 1,000 trucks that are owned by independent truckers in Lagos and the Southwest region? Imagine hitting the market with 1,000 trucks. Is basically looking towards the realm of monopolistic control by Dangote. So, is there any form of regulatory oversight that can come into the fray on this matter?
Yeah, so like I said earlier, the players in that sector are still coming together to fine tune the agreement to
Okay.
find a way that it benefits everyone, benefit Dangote, benefit the marketers that are playing in the sector, and even eventually benefits the average Nigerian on the streets. And if you look at the way it's going, it's not. I don't think it's a monopolistic thing because then we have people you are allowed as a marketer also import.
To import your
So
to
yes,
bring your own
to bring
to try the same model.
exactly to bring your. So it's a matter of competition.
So that means if you own your depot now, that means you probably will be looking at having to go and buy your own trucks and do your direct distribution.
Sure, exactly. They're bringing those products from outside the country. Like we're already seeing, there are conversation around Dangote Refinery can supply the whole of Nigeria. However,
Yes.
you're still allowed to import if you feel like that is favorable for your business. But the crux of the matter is to make sure that the quality as stipulated by regulatory organizations in Nigeria are met. So importation, Dangote Refinery, is if the quality is meeting up to standards, then you can run your business. However, I still feel like they will eventually have to come together and have a conversation.
Have a conversation.
Yes, and there are reports by Nogasa secretary just over the week and Ipman too that eventually they're having the talk.
They're
And
going to
talk
have
is
the
happening.
talk.
Yeah, so hopefully
Maybe they
we
would.
hear from them very soon.
Another thing there is that so there's a business model that Dangote operates with the cement. He used to operate. So because I think one thing that some of the petroleum marketers did not take into consideration is the fact that when it comes to running a logistic, what's the word now? Any business that has like this huge logistic demand, I think Dangote is a genius at it. He's experienced at it. He's run businesses, for example, Dangote Cement. Now, Dangote started the entire system of having to buy trucks to move cement from the ports to the consumers. In the past, dependent marketers, warehouse owners would go buy their trucks and would be the ones to transport the cement. But he started the entire model, and he crafted the model to the point where they began to have lease to own trucks, where they lease the trucks to warehouses and they'll buy. So do you think that model will happen, that Dangote will probably lease out some of these CNG trucks?
Exactly. So again, like I said, he is about his business. Yes. And eventually the marketers will have to see the pros and cons.
Okay.
And if you feel like he's taking you out of a job, or he's taking the market away from you, if you can't win them, you join them. And the model you just explained now, where he leases out the truck to marketers.
Yes.
So now you are not just a marketer, you're now working directly with him or for him, if you want to look at it that way, because it's his truck that you are leasing. So one way or the other, you're still paying him for the trucks. So I think, and then he has the pool. He's the richest man in Nigeria. Not even, I'm sure in Africa.
The richest black man in the world.
In the world. So he has the pool. The resources are there. He could just, and it make things happen because of funds. So I feel from that perspective of the funding, the resources that he has at his disposal, he's already won the game.
Okay. Now, this question I want to ask is there's friction since the start of Dangote Refinery. We've always had this friction between the importers and the refinery itself, based on the competition. How will this move? Do you think that this move is going to further deepen that friction, the ongoing tensions? And is there a possibility that importers may want to sabotage the move?
Well, like I said, all parties are about their business.
Yes.
So they want to fight for their own interest. That's the marketers.
Okay.
Dangote is fighting for his interest. Average Nigerians are there fighting for their
So
own
when the
interest.
elephant fights, the grass suffers.
So, but in this case, I think the grass will not just suffer. The grass will probably get something positive. Because recently, before when the refinery came on stream, it used to be Dangote Refinery's product. It's cheaper than imported products.
Okay.
There's sometime this month, last month,
Started
we started seeing that importation is
price war.
exactly. Importation has dropped. The price of importers now, independent marketers, are now having cheaper petrol than Dangote Refinery. Yeah. So these are the things I feel like will work in the favor of Nigerians. So if they are having competition, Nigerians win.
Nigerians win. So in this case, it's not that the grass suffers. The grass, okay.
The grass not suffering.
So what are some of the indicators that you think that we need to watch out for, maybe to assess how well this initiative has gone? Like, say, will there be a drop in prices? Will there be consistent supply of petrol? Maybe we'll say now this is the end to everything fuel scarcity forever in Nigeria's history. Or what are the indicators that you think that we need to watch out for to assess how effective those trucks have been?
Yeah, so for the price reduction, I think we're already seeing that even without the trucks. We're already seeing price reduction from Dangote Refinery, from the importers, marketers. Yes, so that has already been alleviated. We could see that this has been done. Then on the part of grid, there's queues, scarcity. I think last December we normally do in Nigeria have scarcity between December and February.
Between December and February,
yes. But last year's, that's 2024 December down to February 2025, we didn't see anything like that. So again, maybe, just maybe, the initial stage of all of this might want to lead to something like that. Like I said, they will eventually have to go back to the drawing board, all parties sitting together to make sure that they analyze what works for them, what works for Dangote Refinery, what works for the importers, the logistic companies, and every parties involved, so that they find a common ground and come together and make it work. Because if they try to sabotage Dangote Refinery, which I feel was what he thought or still thinks was happening, that led to him going about bringing those trucks. Okay, I want to cut all these middlemen. I want to go directly to the marketers, because these middlemen are making business bad for me. You understand? So, like I said, he has a pool, he has the resources, and I feel like he has a team that have done the analysis and seen that, okay, we've done this with the cement, we can actually do this with petrol and diesel. So let's find a way to make these people be on their toes. It might eventually work in his favor or work for the Nigerian favor. At the end of the day, I do not see scarcity. If there will be, it will be for a short term, while all of this has been ironed out. So then the last thing you asked?
No, I was asking what are the indicators.
Then I think we'll also look at Nigeria's petrol consumption. There's been discrepancies in Nigeria's
data.
Yes, it's been 60,000, there's been 30 million, 60 million liters. And then you also realize that the body, that's the NMDPRA, there was a time they used to release a report on truck out, what was pushed out. Well, if you go on their website today, as of this morning, the latest report there was in 2023. I think August 2023. So there are no reports unless that's the chief executive, Ahmad Farouk, will come out to say, okay, this is the numbers we're doing, which I feel is not the right way to go if we want to talk about transparency and integrity. We need the data as it's happening. If it's data for Monday, we should have it on or before Tuesday morning. So I believe then Dangote has said, oh, we're not doing up to 60 million, 70 million. It's way below that. So I feel like this move will also show
some form of transparency.
Yes.
Okay.
To the sector, and we'll see what he from his refinery is trucking out, and the importers, whatever numbers they're giving us, we'll try to put it together and see if there are changes in that regard. So I feel these are some of the things that we should be open up.
Okay, thank you so much for your time, Ibrahim,
Thank you for
on the
having me.
show this morning. Thank you for coming on Economy and Markets. It's been insightful talking to us about some of the things to expect as those CNG trucks start to roll out in the next couple of days and probably couple of weeks. We don't know. Thank you so much.
Thank you.
And to our viewers, that's all we can take on Economy and Market this morning. Thank you for staying with us and always stick with us. This is Business Day TV. Have a lovely morning.